Very good morning to everyone. So this is your unit number 3, income from other sources. I already shared this PDF, means problem PDF in your telegram and also in your class group. So here the first problem, following incomes are received by Mr. A. He is a resident in previous year 2018-19. Compute his taxable income from the head of other sources. The first one, director fees. The director fees is fully taxable here. Next one, the interest from post office saving bank account. So this is very important. So any interest which is received from post office saving bank account means the individual otherwise joint account can claim exemption. So here the exemption limit for individual is 3,500 and for joint account the exemption limit is 7,000. So a post office saving bank account, a saving bank interest is exempt only to the extent of rupees 3,500 in case of an individual account and rupees 7,000 in case of joint account from the assessment year 2012 and 13. So next one, any dividend which is received from cooperative societies is fully taxable. So other than any dividend which is received from Indian companies, otherwise domestic company, or UTI, otherwise mutual fund, is fully exempt under the head of tax. Next, winning from Andhra Pradesh state lottery. So this lottery is subject to casual income. So any income from lotteries, crossword puzzles, card games, so TV game shows and horse race are fully taxable. Such incomes are subject to TDS. This kind of income is subject to TDS at the rate of 30%, and if income is exceed rupees 10,000. So for this kind of income we have to gross up. Yesterday only we discuss gross up formula. So here we have to use grossing of formulas. Next, to family pension received rupees 30,000 per month. So here the family pension is available in the case deduction is available in case of family pension. The deduction rules is an amount of rupees 15,000 and 1/3 of pension, whichever is low, that much of amount we can be claimed as exemption under your family pension. Next, to dividend received on preference shares is fully exempt. Next, to insurance commission received 14,250. Expenses incurred in earning insurance commission is rupees 2,500. So this kind of expenses we have to deduct from our income. So this kind of insurance income is also subject to TDS at the rate of 5%. So for this we have to do grossing up and we have to apply grossing formula here, because the insurance commission is received means this amount is nothing but your net winning, so net income. So net income we have to make as gross income. Next, Mr. Ajay received a gold chain from his friend as gift. Its fair market value is rupees 32,000, and painting from another friend on gift, its fair market value is 18,000. So yesterday only we discussed any sum of money which is received by an individual or otherwise HUF without any consideration from one or more persons in previous year, the aggregate value if exceed rupees 50,000, the entire amount will be taxable. If the aggregate value which is not exceed rupees 50,000 means the individual otherwise HUF can claim exemption. So here the amount is 32,000 and also 18,000. So we add means the result is 50,000. So the gift does not exceed rupees 50,000 means the entire amount is exempt from your tax calculation. So next, first we have to write computation of income from other sources, Mr. Ajay, for the assessment year 2019-20. Next, first write down. So first one is director fees. Record that one. Directors fees. So how much the director fees? The director fees is 10,000, is fully taxable. So record 10,000. So next one, interest from post office saving bank account. So now only I discussed the interest from post office is subject to exemption. The exemption for individual is 3,500. Mr. A is a resident. He is an individual. So the exemption limit is 3,500. So write interest on post office account. Post office saving bank account. So the value is 5,000 less exemption up to rupees 3,500. Then the remaining balance is 1,500 is taxable. Next one, dividend received from cooperative societies is fully taxable. So next, write down dividend from cooperative society. So the value is 7,000. So record 7,000. Next, winning from Andhra Pradesh state lottery rupees 28,000. So this is subject to TDS. So the winning from Andhra Pradesh lottery. So lotteries comes under your casual income. So for this reason we have to grossing up this amount. So here winning from Andhra Pradesh lottery. So what is the value here? The value is 28,000. So this is the net value. So what is the formula for grossing up? For grossing up, for formula is net winning divided by 100 minus TDS into 100. So the net winning is 28,000. So record 28,000. So 100 minus the TDS for casual winning. TDS for casual winning is 30%. So 30 and 100. So calculate this one. So 28,000 into 100 divided by 70. So that is subject to 40,000. So here the taxable amount is 40,000. Next. So family pension received rupees 30,000 per annum. So family pension is subject to deduction. So next, write down family pension. Family pension. So what is the amount? The amount is 30,000. Write down this 30,000 here, inner column, 30,000. Next, less first one, ceiling limit means ceiling limit is nothing, sorry, ceiling limit is nothing but maximum amount. So maximum amount is 15,000 or 1/3 of family pension. So what is the family pension amount? 30,000 into 1/3. So 30,000 into 1/3 is nothing but 10,000. Whichever is less is qualified as your deduction. So 10,000 is qualified. The remaining 20,000 is your taxable income under your family pension. Next one, dividend received on preference shares is fully exempt. So dividend received on preference shares is completely exempt because we assume that this kind of dividend which is received from Indian otherwise domestic company, when the dividend which is received from Indian otherwise domestic or UTI mutual fund means those kind of income is fully exempt for tax calculation. Next one, insurance commission received rupees 14,500. When the name given as received means this is your net income. The expenses incurred in earning insurance is insurance commission is rupees 2,500. So before deducting this expenses, we have to gross up this value. So for what is formula for grossing? So we only discuss the insurance commission is subject to TDS at the rate of 5%. So again we have to apply the grossing of formula here. So next insurance commission. So insurance commission is subject to TDS at the rate of 5%. So this is your net amount. We have to gross up this amount. For grossing of the formula is again net income divided by 100 minus TDS into 100. So what is the net income here? The net income is 14,250. Next 100. The TDS rate on insurance is 5% into 100. So next, so calculate 14,250 into 100 divided by 95. So the gross value is 15,000. So gross value is 15,000. So write 15,000. Next we have to deduct expenses less expenses. So how much they incurred expenses for receiving this insurance? 2,500. So deduct this 2,500 out of your gross value. So 2,500. So 15,000 minus 2,500. So 12,500 is your taxable income. So now last one, Mr. Ajay received a gold chain from his friend as a gift. Its fair market value is rupees 32,000. Painting from another friend on gift. Its fair market value is 18,000. If we add both amount means the both amount result will be 50,000. Then the gift is not exceed rupees 50,000. Then the entire gift value is exempt under the calculation of your tax. So here write down gift from friend. Gift from friend. So exempt up to rupees 50,000. So here last one, write it as exempt. So the total is 91,000. So this is your taxable income from other sources. So this is your problem, and I request to write these notes in your class book, means in your notebook. The first one is post office saving bank account is exempt only to the extent of rupees 3,500 in case of an individual account and rupees 7,000 in case of joint account from assessment year 2013 and 12 and 13 onwards. Then winning from lottery, this is I already explained. Next one, grossing of formula. So next one, TDS on casual income is 30%. Next one, for family pension, the deduction limit up to rupees 15,000 or 1/3 of pension, whichever is less, that will be considered as deduction. Next so dividend, why we exempt the dividend on preference shares. So this is the note for that. Next to TDS on insurance commission is subject to 5%. Next to gift related note. Thank you.